Let's talk about Disney stock, guys. Ticker symbol DIS. They trade on the New York Stock Exchange, and they are currently trading at $108.67. So real quick, my name is Jeff. If you are interested in stock market, real estate, cryptocurrency, anything you can invest in, go ahead and subscribe now so you don't miss any content. So let's talk about some of the stuff Disney does already as a standalone company, guys. They are massively huge as is. They stay between 150 and 170 billion dollar market cap on any given day. Let's go down here and take a look. This is some of the media networks that they own. If you've ever watched television before in your life, you have probably watched off of a Disney channel or a Disney-owned channel. So they have, here we go, the Disney Channel, ABC, Freeform, ESPN. They own, operate all of those. Parks and resorts, and this gets a little crazy here, but they own the Disneyland Resort, Walt Disney World, and then they have resorts all over the world with Shanghai, Paris, Tokyo, Hong Kong. They have a Disney cruise line, which is cool. I've always wanted to go on one of those and haven't made it yet, but that's kind of in my bucket list. I would like to go on a Disney cruise. Now here's some of the studio entertainment they're involved with. Obviously they own all the Walt Disney Studios and the animation, but they also own Pixar. They have a music and theatrical group, Disney Toon Studios, and then of course the popular Marvel Studios and Disney Nature, and then your Lucasfilm, which is like your Star Wars, your Indiana Jones, those type of things. They own, operate all of these as well. So last week, Disney announced that it plans to acquire 21st Century Fox for an estimated $52.4 billion. Guys, this is a blockbuster deal. This is huge. Hopefully nothing comes in and interferes with it, but it would be safe to say that in due time, Disney is going to acquire 21st Century Fox. And this is a big, in my opinion, and in the Wall Street opinion would be that this is kind of a big threat to Netflix. Okay, is that these two companies getting together, putting all their assets together, could be not necessarily an immediate threat to Netflix, but over time it could definitely cut into what Netflix is trying to do. Let me read this quick. Is that Disney, which owns ABC and ESPN, hopes 21st Century Fox will supercharge its plans to introduce two Netflix-style streaming services. Disney's first major streaming effort, ESPN Plus, will arrive in the spring. A second and still unnamed offering, built around the company's Disney, Marvel, Lucasfilm, and Pixar brands, will roll out late next year. Rolling out its streaming portfolio will be Hulu, an established service that focuses on older viewers with programming that includes ABC shows. Okay, so I never say underestimate Netflix. They are still the king of streaming, but Disney is the king of content. Okay, and this is a very strategic move here, guys, and don't ever make assumptions. Sometimes these acquisitions work out, other times they don't. Other times all these things start happening, and Congress gets involved, and politics start getting involved to interfere with it. But if this acquisition goes through, I would be a little scared if I was Netflix. I would be a little nervous between the net neutrality repeal that happened recently, and like I said, now Disney and Fox getting together. I would be a little nervous if I was Netflix. I really would. So here's just a quick glance at what the Disney-Fox acquisition, a quick overview of what it's probably going to look something like. Is that over here on the left, you got all the companies, obviously, that Disney owns and operates, and then you have all of the companies that 21st Century Fox owns and operates, okay? So we can toggle through this. And here is some of the film content that 20th Century Fox owns. They have so much in their portfolio asset-wise to offer. Avatar, Titanic, X-Men, Deadpool, Ice Age, Planet of the Apes, Simpsons, and just the list goes on. They have a top-of-the-line sports package here that they offer in the United States, Europe, India, Latin America. I'm pretty excited about that. With Major League Baseball, NBA, NHL, and then of course, last but not least, is the hold in Hulu. I think that's really the key, guys. I think that Disney has about a 30% hold in Hulu. 21st Century Fox has a 30% hold. That's going to give Disney a 60% hold and give them more dominance and reign over Hulu, which kind of opens the door for them to start taking over. And I think that is a real game changer in the streaming business. Just everything 21st Century Fox has to offer just enriches Disney that much more. So this is a really, really exciting thing here. So all the things we just talked about are all very futuristic, associated, things that could possibly happen, and they plan to happen. But let's just take a look at Disney where it stands right now. Okay, Disney stock is that. I want to look at this from the perspective of, if I would have made an investment in Disney 1 year ago, what would my investment look like today? Okay, I don't necessarily want to look at it from like a day trader's or a swing trader's point of view, but more of like the long-term growth prospects. So a year ago, guys, Disney was trading around $104 and $105. Okay, we fast forward to today, and Disney is trading around $108 and $109. So in a year's time, it's just not made a whole lot of progress on the stock chart. Your price movement would be nearly the same as it was a year ago if you would have bought and hold. And even like if you want to take a look here at the 2-year chart, 2 years ago, Disney was trading around $106 to $108. So just not a whole lot of growth over the past 2 years. Not a whole lot of growth to speak of. Very valuable. Obviously, they pay a dividend. They pay a dividend twice a year, so you would have gotten some gains there. But just not, not growing very much over the past 2 years. You want to look at a 5-year chart, they've grown a lot. I personally made an investment in Disney back in 2011, and I held for about a year, and I sold out my shares. I took, I think, around a 28% gain, and I got I got 2 dividend payments, but that was a very good investment. But like I said, just if you want to get a little bit more, closer to like what's relevant, what's going on now, Disney has not grown very much over the last 2 years. Now, taking a look at some of the fundamentals, guys, is Disney is an outstanding company. Okay. They have a $163 billion market cap currently, trailing PE of 19.1, which is, good. I have no problems there. Forward PE at 16.64. That is very, very good for a company of this magnitude. Come on down here, the share statistics. The short percent of float sits around 1.4%. I'm very comfortable there. The profitability, the profit margin, 16.29%. Operating margin, 25.37%. Very, very good figures there. Very good figures. They pay a biannually dividend. It sits about 1.51%, which is decent. It's not great, but it's decent. So you're going to get a $1.68 return on every share you own in a year's time. And then let's now here's the one strike against Disney on their fundamentals, guys, is on their balance sheet. A lot of these content companies, a lot of these big mega media companies, they all kind of operate with the same business model. But this is one thing maybe that hasn't hurt Disney, but maybe is holding it back a little bit, is the total debt. $25.2 billion of total debt and only $4 billion of total cash. So that does not put out a very good ratio there. A lot of stock analysts will just say, hey, ignore that. That's the way things are. The one little bit of perspective that I would like to give you is that think about this, not necessarily in a healthy stock market, but think about this in case of a recession or a big stock market pullback. Would be, try to keep in mind that if the market was to do that, these real debt-heavy companies are going to get hit the hardest, okay? where a company that operates with a little bit cleaner of a margin and a little bit cleaner of a cash flow are going to stay propped upright, where, like I said, a company like Disney is going to get absolutely slammed holding so much debt. And lastly, guys, I want to talk about the earnings report, okay? So this last quarter in Q3, they had guidance cut, and then they missed on earnings. So obviously the long-term shareholders do not like to see that, but I think it affords a good opportunity to buy Disney stock here at these levels. Quarter four, the guidance was raised quite a bit, and that's a very bullish thing. So we are in between this little time period where guidance was cut and they missed, and then it's gotten raised way back up. Okay, so in my opinion, with all the excitement surrounding Disney right now, and obviously the acquisition of Fox, I'm going to call Disney stock a buy and hold. Okay, and like I said, over the next 3 to 5 years, I don't see this company having a problem getting to $200 a share. Guys, leave me some comments. I would love to hear what you're thinking about Disney. I would also love to hear what you're thinking about the acquisition of 21st Century Fox. Hit that like button if you enjoyed my video, and as always, thank you for watching.